Welcome to the deep dive. Today, we're digging into the recent performance and some big strategic moves from a key player in India's financial markets. The Multi-Commodity Exchange of India Limited. You probably know them as MCX. We've got the latest official documents right here, the outcome from their board meeting, a detailed investor presentation, and their press release. All fresh, dated August 1st, 2025, and they cover the Q1 results for fiscal year 26. So our job today, we're going to unpack all of this, pull out the really important stuff, and help you get a clear picture of where MCX stands right now and where they might be heading. Basically, a shortcut to getting up to speed. Okay, let's get into it.
Absolutely. And these aren't just dry reports, you know. They give us a really interesting snapshot of how a major commodity derivatives market is operating and, well, changing. What's fascinating here is you see both really strong financials and a big strategic play designed to make the market more accessible.
Okay, let's start with those headline numbers then. Q1 FY26, ending June 30th, 2025. What were the main financial highlights for MCX?
Right, so the consolidated results, looking at Q1 this year versus last year, well, they show some really quite impressive growth across the board. Their total revenue hit an all-time high, 405.82 crores. That's a solid 60% jump year on year.
60%, wow.
Yeah. And revenue from operations, that's their core business income, that also climbed significantly, up 59% year on year, landing at 373.21 crore. And you look at profits. Profit before tax, PBT, that was up a very impressive 86%, reaching 256.91 crore.
86%.
And the bottom line, profit after tax, PDT, that grew 83% to 203.19 crore. And maybe most importantly for an exchange, their average daily turnover ADT, combining futures and options, it surged, up 80% year on year, hitting 3,010,775 crore daily on average.
Okay, those numbers definitely tell a story. They're not just strong, they're like booming.
Yeah.
So when you look at that kind of performance, what's the underlying narrative? What actually drove this big surge?
Well, the MD and CEO, Ms. Pravina Rai, she put it down to starting the year on a really positive note, highlighted their resilience, their strategic focus, and what's, always an evolving market. She pointed specifically to getting more people involved, increased participation from institutional clients, the big investment firms, but also from hedgers, people managing risk, and even the MSME sector, the smaller businesses and physical market players too.
Right, getting more diverse players onto the exchange.
Exactly, and she credited MCX's awareness campaigns and their ongoing product innovation for bringing these different groups in.
That makes sense, broadening the base. So if we dig a bit deeper into those big numbers, where exactly did the growth come from? Was it one specific area, like taking off, or was it more spread out? And critically, does it look sustainable?
Yeah, good question. It looks like there was definitely a standout performer. The operational highlights show a pretty significant shift, especially in the bullion segment.
Gold and silver.
Precisely. Its share of the total ADT just ballooned, really. Went from 23% in Q1 last year to 44% in Q1 this year.
Huge jump.
Massive. And they think this was helped strategically by launching new products like Gold Mini, Gold 10 futures, and also new silver contracts, a 30-kilogram one and a Silver Mini 5-kilogram one. Things designed to make trading precious metals a bit easier for different kinds of traders. And just to give you a scale of that, average daily turnover for bullion futures alone, up 70% year on year. That's 30,295 crore daily.
Wow.
And even bigger, bullion options ADT, up a staggering 232% year on year, hit over 106,000 crore in notional premium. That's the total value underlying those options.
Okay, so bullion was clearly the star. What about other areas?
Energy also did well. The total futures and options ADT in the energy segment increased by 32% year on year, so decent growth there too. And just in terms of their overall position, MCX basically dominates the market. They hold about 98.8% market share in the value of commodity futures traded in that quarter. And they've got 100% market share in precious metals, base metals, and the index futures. That's market dominance. So, okay, beyond the numbers and the market share, what are the actual strategic things MCX is doing to keep this growth going? What's the bigger picture operationally?
Right. They've been quite clear about their strategy. Firstly, focusing on participation. They've enabled banks to act as professional clearing members. That means banks can offer clearing services, which sort of expands the whole ecosystem.
Makes it easier for more people to connect.
Exactly. They've integrated more brokers, pushed for more institutional involvement, mutual funds, portfolio managers, foreign portfolio investors, FPIs. The numbers show it too. 552 members, and nearly 3.5 crore unique client codes as of June 30th. That's basically an ID for everyone trading. Secondly, product innovation. They haven't stood still. They introduced electricity futures, that's a cash-settled contract based on spot prices from the Indian Energy Exchange. And MCX was the first exchange in India to launch those. That's pretty significant for the power sector.
Yeah, definitely. Yeah. They also relaunched cotton futures, tweaked them to better fit what the market needed. And thirdly, underpinning all this is their operational strength. Their subsidiary, MCX Clearing Corporation, MCX-CCL, it acts as the central counterparty for every single trade. That hugely reduces risk for everyone. It's got a solid settlement guarantee fund, the SGF, with about 965 crore in it. That's the safety net, to make sure trades settle even if someone defaults. And they use a sophisticated risk management system, a span-based value-at-risk margining model.
State-of-the-art stuff.
Pretty much. And they also highlighted their physical delivery numbers, showing they're actually connected to the real commodities. Over 153 tons of gold, over 6,000 tons of silver delivered since they started, plus 4 lakh tons of base metals since they switched those contracts to compulsory delivery back in 2019.
That really does paint a picture of a robust operation. Okay, let's switch gears a bit now to that other big announcement from the August 1st meeting, the stock split. What exactly are they doing there, and why is it a big deal?
Right, the stock split. So the board approved what's called a subdivision. They're taking each existing share, which currently has a face value of €, and splitting it into 5 shares, each with a face value of 2.
Okay, 1 into 5.
Exactly. Now, it's not final yet. It needs the green light from regulators, statutory bodies, and, crucially, the shareholders themselves.
It sounds like a classic move to make the stock cheaper per share, maybe attract more retail investors. Is that the main idea here?
That's precisely the rationale MCX stated. To enhance stock affordability, make it more accessible, especially for retail investors. When a stock price gets really high, it can put off smaller individual investors.
Right. It seems too expensive to buy even one share sometimes.
Exactly. So by splitting the shares, the price per share comes down, making it easier, theoretically, for more people to buy in and participate. It's about broadening that investor base.
Makes sense. But does splitting the stock change the company's overall value or its capital structure fundamentally?
Good point. No, it doesn't. While the number of shares goes up 5 times, the total value of the company's capital stays exactly the same. Think of their authorized share capital, the maximum they can issue. It goes from 7 crore shares at 10 each to 35 crore shares at 2 each. But the total value is still 70 crore either way.
Ah, okay. Just changing the units.
Precisely. Same for the paid-up capital the shares actually issued and paid for. It goes from roughly 5.1 crore shares at 10 to about 25.5 crore shares at 2. But the total value is still that euro 50.99 crore figure. It's like swapping a 10 rupee note for 5 2 rupee coins, same value, just more pieces.
Got it. And they're expecting to get this done within the usual timelines set by the Companies Act and SEBI, the market regulator. So looking beyond just this quarter's results and the stock split, how does MCX actually position itself globally? We hear they're big in India, but where do they stand internationally? And what other achievements sort of mark their journey?
Well, their performance definitely puts them on the global map. According to the Futures Industry Association, FIA, they track these markets worldwide. MCX was actually the world's largest commodity option exchange in 2024.
Largest in options, wow.
Yes, so not just a regional player, but a global leader in that specific area.
Yeah.
And overall, looking at all commodity contracts, they moved up the ranks too, from 7th largest globally to 6th largest during 2024, again based on that FIA data.
Yeah.
And remember, they were India's first listed electronic exchange, started way back in November 2003, so they've really been pioneers in the Indian market space.
That's a significant history. What are some other milestones that kind of highlight how they've evolved and shaped the market?
Oh, there's quite a list. They launched India's very first options contract on gold futures. That was a big deal for hedging and trading precious metals. They converted all their base metal futures contracts to compulsory physical delivery. That really strengthened the link to the actual spot markets, increased transparency.
Right, not just paper trading.
It's exactly. They launched new commodity indices, the iComdex series, including sectoral ones. These act as benchmarks for different commodity groups. Operationally, a big one was implementing their new commodity derivatives platform just last October in 2023. They've launched mini versions of base metal and energy contracts, also deliverable, making them more accessible. They've even impaneled domestic refiners for delivering gold and lead, which helps ensure quality standards. And internationally, they've got licensing deals with big names like NYMEX, part of the CME Group, and the Indian Energy Exchange, IEX.
So lots of innovation and partnerships.
Definitely. They're also a member of IOSCO, the global securities regulators body. They teamed up with other Indian institutions to set up the International Bullion Exchange, IIBX, at Gift City. And very recently, they signed a deal to consult with the Chittagong Stock Exchange in Bangladesh to help them set up their first commodity exchange.
It really seems clear they are constantly pushing to develop the market, connect it better to the physical side, and increase transparency, just like their CEO highlighted. So we've really taken a deep dive today. We've seen MCX post some, frankly, impressive Q1 FY26 results, really driven by that surge in bullion trading and their ongoing product innovation. And alongside that, this significant stock split aimed squarely at making their shares easier for retail investors to buy. These aren't separate things, are they? They feel connected.
Absolutely. That stock split isn't just a financial tweak. It really highlights their commitment to, well, democratizing the market, bringing in more retail participants. And when you combine that with their growing global influence, it paints a picture of a strategically adaptive exchange, really trying to boost engagement in India's commodity markets.
So it makes you think, doesn't it? When you see a company split its stock, maybe look beyond the immediate price effect. Ask, what kind of investor are they trying to attract? And what does that tell you about their bigger vision for market growth and maybe inclusivity?
And that really sparks another question, doesn't it? If they succeed in bringing in significantly more retail participation through moves like this, how might that change things? How could it influence, say, liquidity or even volatility dynamics in the commodity derivatives market for the next few quarters? It's kind of a live experiment in market structure.
Definitely food for thought, something to keep an eye on. Well, thanks for joining us for this deep dive.